surgical teams, research teams. No one's working in isolation. We all learn from each other. There's a saying in medical school, each one, teach one. And the idea is we learn from each other. And so I think it's vitally important to be in that team context and keep coming up with fresh perceptions, fresh ideas. That's what keeps the creativity going. That's what keeps the motivation going. That's what prevents us from becoming stale.
Welcome to the Algorithmic Advantage. We're here to expand the toolkit of the quant trading community and introduce investors to the many advantages of systematic trading. Our goal is to educate and inspire as we embark on a captivating journey into the vast knowledge and experience of leading portfolio managers and other experts in the field. We hope you enjoy the show, and if you do, please subscribe, leave us a review, or even buy us a coffee via the link on the algorithmicadvantage.com. We really appreciate it.
Dr. Brett Steenbarger, it's a real pleasure to have you on the show. Welcome. Thanks for coming.
Well, thank you for having me, Simon. I'm looking forward to our conversation.
Indeed. It's going to be, it's been something on my mind for a little while to see how I can press you and what I can get out of you that would help the systematic trader, because discretionary traders are deeply interested in the trader mindset, just because there's so much said about how much it can help. And then I think the quantitative trader tends to dismiss a lot of that. And so it's going to be very interesting to just maybe unpick a little bit where the whole mindset and psychology fits into the systematic trading. But to kick us off, do you want to give us, Brett, a little bit of a bio, just a really quick overview of how you got involved in this combination of trading and psychology?
Right. Yeah, so I have traded myself since the late 1970s, so I'm dating myself, and traded while I attended graduate school and got my degree in clinical psychology. I've had an interest in financial markets for quite a while, but my main interest has always been in working with people. I eventually put those two interests together and wrote my first book in 2003 called The Psychology of Trading. And it was an attempt to understand the psychological factors that impact trading performance. And what I found is that traders I knew and had spoken to were similar to the people I had worked with as a psychologist, basically healthy people dealing with stresses and challenges, and some of the techniques that were effective for people in their day-to-day challenges ended up being helpful in trading. And so I started applying short-term techniques to help people with their performance issues. That took off. I was hired by a market-making firm in electronic futures in Chicago. And then after that was hired by a hedge fund on a full-time basis. And I branched out from there and began working with a number of different hedge funds and currently work with several large funds, multi-strats. So working with people in different markets and different strategies, including quantitative PMs and teams, as well as discretionary.
Great. Can't wait to get into that. I wanted to, move next, though, into some of the more general foundations. And, there's a classic debate, perhaps initially fired up through the turtles experiment. I'm talking about whether traders are born or can be taught, essentially, whether traders are born or made. And I'm just wondering what your perspectives are on that, to what extent there's a certain kind of DNA, if you like, that makes for a good trader, and how much can be cultivated, taught, learnt over time.
Yeah, there's actually research on this topic, and it pertains not only to trading but other fields, that we have certain inborn talents. And so it's not unusual, for example, to find people at a very early age who have an interest in chess or have an interest in doing artwork. There's an early set of talents that have a large inborn component. On the other hand, that's not enough. In addition to having those talents, we have to build skills specific to the domain. So, for example, someone might be born with athletic talent, but they have to learn the skills to be a baseball player or a basketball player. And so, skills are acquired typically through mentoring, but they build upon basic talents. The challenge, I think, for people in financial markets is to figure out where their talents lie, what are they really good at, and then how can they build the skills that would allow them to make the most of those talents.
How do they do that generally, do you think? Do you just have to explore for a while to work out what you're good at or what you like?
Well, exploration is important, Simon. You're absolutely right. But we gravitate to what is meaningful to us, what speaks to us. And so typically, if you look at what people have a passion for, that often reflects some area of talent, of inborn leaning, so to speak. So, for example, at a very early age, I devoured just about every book I could find on Greek mythology. I was very interested in the stories of the mythological heroes. And then in my sophomore year of college, I became very interested in the heroic philosophy of the novelist philosopher Ayn Rand and became very involved with that group. Then, as I trained as a psychologist, I became quite interested in what's called positive psychology and the psychology of people who don't have mental illnesses, people who are very successful. So you can see throughout my life, there's a common thread and theme that I'm interested in higher levels of development. And that's what turns me on. That's what interests me. And sure enough, where there's passion, there's talent.
Yes. Just as an aside, what would be the first Ayn Rand book that you would recommend someone to read?
Well, the first one I read was The Fountainhead. And that's about an innovative architect and the challenges he faces in innovating. And it's loosely inspired by Frank Lloyd Wright, the modernistic architect. But I think that's a good one to start with if someone might be interested in her work.
Awesome. Okay, so there's many different kinds of traders, Brett, and obviously I'm going to come at it today from the angle of the algorithmic trader. But what's been your experience in working with different traders? So short-term discretionary traders plugged into the screen, longer-term, more investors. We've got systematic traders. We've got traders of different markets and different timeframes and all of that. Are there certain psychological attributes that kind of endear themselves to different kinds of trading? Are there trader profiles where these kind of characteristics lend themselves more to a certain kind of trading and alternatives to different kinds of trading? Are there profiles like that you've discovered?
Yeah, there are definitely differences between, let's say, longer term traders or investors and very short term traders. There are important cognitive differences. The longer term folks really are focused on understanding. They put together information. Let's say they're a macro portfolio manager, and they're putting together information about different economies and what rates are doing, what currencies are doing, and they come up with a picture that tells them what's strong, what's weak, etc. So they're trying to understand the world. The very short-term traders, and the ones in Chicago I worked with, the average holding time was 6 minutes. It's not about understanding the world. You can't understand too much in 6 minutes. So what they would look at was high frequency data. They would look at the order book, and they would see the short-term behavior of the order book, and certain prices would hold, and it would go bid, it would go bid, it would go bid. It couldn't go lower. They would buy, and sure enough, it would pop higher, and they quickly take a profit. So that's about quick thinking. That's about pattern recognition. In Daniel Kahneman's terms, they are the fast thinkers rather than the slow, deep thinkers. And as a result, they experience different psychological challenges. Now, what's interesting in the algorithmic world is that there's a lot of research that precedes trading. And some of that research is digging pretty deep. And so they are more like the slower, deeper thinkers than the ones who are trading very rapidly. And they experience some of the same challenges and some of the same frustrations that those bigger picture portfolio managers face. And they deal with a set of psychological issues that really the short-term folks don't experience particularly. And that is seeing the world well, seeing the world accurately, but seeing the world uniquely.
Right.
The big area of work that I do, you were mentioning mindset, people's emotion. That's no, that's not it. I know that's what everyone talks about. When all you have is a hammer, everything becomes a nail. Right. But what's important for the bigger picture trader, and particularly the algorithmic teams, is the psychological variable of creativity.
Interesting.
Yes, it's fascinating working with them, because not only are they trying to test ideas rigorously, that's very, very important, obviously, they are trying to understand the world differently from others. Not only do you have to produce good returns, you have to produce unique returns in the institutional world. If you're just duplicating what other teams are doing, well, they'll just allocate capital to those teams. So you really want to see the market in unique ways, not just in rigorous ways. And a big part of my work with the quant teams is helping them cultivate creativity. There are techniques for doing that. There's research for doing that. And so it's not working on mindset in the sense of, oh, you have to control your emotions. It's not like that at all. But it's, how do you foster a creative process? If you're working within a team, how can the team operate in a more creative context? That's really interesting work. There's lots of good research about creativity and building creativity. And that is my main work with the quant folks.
Yeah, I love that, Brett. So I've often mentioned on the show the kind of art plus science aspect of trading and even systematic trading. I've often talked about the importance of the art, if you like, and I'm equating that with the creativity, in that it's not all about the numbers, as important as it is to have a statistical framework and a statistical way of thinking, and maybe we can talk about that as well. But this creative mindset that allows one to think differently and to view the data slightly differently. So, yeah, when you're and then you talked about working in teams and fostering this creativity. Can you give us a few tips and on some of maybe the exercises or the ways to train these habits? And of course, if that's something best done in teams, then it probably talks to the fact that even retail traders should be hooked into online or other communities to be perhaps finding mentors and colleagues to work with to generate more creative outcomes?
Yeah, when you look at teams in the world of science in general, um, it is highly interactive and highly collaborative. And part of the reason for that is they're trying to see things in different ways, entertain different hypotheses, and so forth. A lot of times, the creativity is expressed through what we look at, not just how we look at it. So, for example, example I like to use is: are you familiar with Marcos Lopez de Prado and
Well,
his work
yes.
in
Yeah.
machine learning? Okay, so he looks at data in what he calls event time. So when the typical trader is looking at market data, they're looking at 5-minute bars, daily bars. They're the x-axis represents time.
Mm.
For Marcos and his team, the x-axis is not time. So, for example, each bar, each open, high, low, close, might represent a certain number of shares traded or contracts traded in the futures market, which completely changes the time series, which completely changes the qualities or characteristics of the time series. There's a quant researcher whose work I really like named John Ehlers, Ehlers. You know John. Okay.
No, John.
Yes. Yeah. Okay. So he has studied cycles in market data in financial time series. Well, those cycles look different when you have ways of expressing the time series in event time rather than in chronological time.
Yeah.
And you can see cycles differently, you can see cycles better, and that opens itself up to some profitable trading. So that's an example of creativity. It's seeing a familiar thing in unique ways.
On the other side, Brett, have you seen certain characteristics around, these quants who are analysing data? So one of our primary problems, if you like, is overfitting to data, and the objective really for the quantitative trader is to be able to create robust systems that will work out of sample in the future, into the unknown future, as we were discussing pre-show. And so, is there a certain kind of statistical mindset, if you like, certain psychological profiles of people who are better able to perhaps have a gut feel for what really is, for what constitutes overfitting? So they've just got a feel for the fact that they've probed too much and they've really forced a particular outcome, and some people perhaps are a little more blind to it, that they're perhaps, if we're so caught up on the end goal, we can sit there and prove something out in the data that's just not going to work in real life. There's a certain kind of honesty that you need to have with yourself about how much you've overhandled the data, for example. Is there a psychology to that whole thing?
Well, there's a methodology and a psychology to that. The psychology pertains to being open-minded. I know people individual traders who try to start out in a systematic way, and so they will back test ideas over the last few years of data. What? That makes no sense because the last few years may not be representative of the few years before that, and the few years before that, and the few years before that. And so rigorous out of sample testing, really working hard to disconfirm ideas, to see what will break, becomes very, very important. If people are just fitting data to a set time frame, they're giving themselves an artificial sense of certainty. Now, in reality, the quant teams I work with do not find a magical system or two systems or three systems that work for all time across all markets. That doesn't happen.
Yeah.
What they do is they find ideas, they find patterns that work in particular market conditions. So, for example, they might have an idea about FX momentum and when will we see trending behavior in currencies as a function of yield curves. So when the yield curve is a certain shape, they look for certain patterns in the currency. As soon as the yield curve is not in that shape, that system is turned off.
Yeah.
They don't trade it. They trade something else that is turned on by the change of context. And so, I think beginners often are trying to find the holy grail, systems that'll work under all conditions. And what I find is that the systematic portfolio managers that I work with are very good at finding contexts. That their understanding is contextual. And in these kind of contexts, here's what works. In these kind of contexts, here's what works. And as we shift contexts, they are shifting money in and out of systems to express what works and what doesn't work. That takes a certain open-mindedness that is very important. It takes a willingness to accept that nothing works forever and nothing works in all conditions. And that's okay. That's okay.
Yeah. That's also really interesting. You've often made a point about the importance of seeing trading as a performance pursuit, a performance-based activity. And I think that also really helps shape and cultivate the way we view trading, the way we pursue excellence in trading, develop ourselves as traders, how much time we give ourselves. Can you talk a little bit to that point?
Yes. There are very interesting dynamics of performance that impact athletes, that impact people in any competitive activity. It could be the performing arts, it could be trading. One of the areas that I'm currently working on and researching, actually, I have a blog post on it today. My blog is TraderFeed, TraderFeed.blogspot.com. And the research that I'm doing pertains to measuring brainwaves and measuring when we are in a state of high focus and concentration and when we are in a relative state of distraction. Now, it turns out, and there are other biofeedback measures. There are ways of measuring, for instance, the blood flow to the prefrontal cortex of the brain. But by measuring these, we can do a couple of things. We can identify when a person is quote unquote in the zone, and we can help them spend more time in the zone. Now, what's really interesting from my perspective is that being in that zone, being highly focused and really attentive to the present is correlated with being creative. So when we are activating the brain, concentration, prefrontal cortex, we see connections among things better. But the idea is that we can cultivate creativity literally by training the brain, by keeping us in states where we are more focused and more able to see connections among different things.
I like it. So, to be honest with myself, one of my great issues is concentration or distraction. And in fact, my grade 6 teacher wrote on my report card that I was easily distracted. So I do find that difficult to sit and concentrate on that one thing and to really be in the zone, because I am very easily triggered by the other 30 things that have to get done or that I would like to do. So are there some hacks, as people like to say, or first steps in cultivating that staying in the zone?
Yeah, there are people who have actual attention deficits, and there are medications that are helpful for that. And the biofeedback training can be quite helpful for helping people sustain focus. What I found interesting with the brainwave biofeedback is that being in a state of high concentration and focus was very different than being in a state of high relaxation. So, for example, I might do a meditation exercise and I would sit very still and I might chant a mantra and I might breathe very rhythmically, slowly, and just focus my mind on my breathing. And that makes me feel relaxed. That does not show up in the brainwave biofeedback.
Interesting.
I don't get into the cognitive zone that way.
Yeah.
In order to get into the cognitive zone, you have to train yourself to focus and then sustain the focus over time. So it's like training a muscle. In the beginning, we can't lift very much for very long, and we can train ourselves to do more and more. That's the most direct hack. That's the most direct way of working on that that I know of. But again, to me, the important connection here is that when we have superior focus, we are able to process more and different information, and that breeds creativity.
The focus breeds creativity. There's a lot of gems in this show already, Brett.
That's great. That's great.
Yeah. I guess the character traits like this of successful traders, are they different necessarily to successful people, quote unquote, successful in other walks of life? That are there any standout specifics for traders, things that traders focus on or that they're good at that might not be equivalent to what made for a great CEO or cafe owner or landscape architect?
Yeah, it's very context specific. In other words, what makes the very short-term trader successful is very different than what makes the portfolio manager who works with a large team successful. So I work with a couple of teams that are 15 members or more. Now, in that situation, you have team members following different markets, different strategies, collecting different information. And a big part of what makes the portfolio manager successful is getting everyone talking to everyone and everyone feeding each other's brains and putting all that information together into a coherent set of market hypotheses, which again is very different than those traders who had the average holding time of 6 minutes.
Hmm.
So it takes different personality characteristics, but it takes different cognitive abilities.
Fair enough. Yeah. There's a quote on your traderfeed.blogspot on your blog that I thought was really great that I wouldn't mind getting you to comment on, where you said a key concept from the research literature is that we cannot make lasting changes while remaining in our normal, habitual states of mind and body. Emotional arousal and fresh experience open us up to change. A major shortcoming of the trading psychology efforts is that we review performance and set goals without transforming our consciousness. And then you go on to say that in upcoming posts you'll talk about how to intensify focus, concentration, whilst staying in this sustained, switched on mode. Yeah, can you talk to us a little bit about what you're thinking and how one comes to develop this emotional arousal, fresh experience that open us up to change, that transforms our consciousness, these kind of big picture changes?
Yeah, so that is from the psychotherapy outcome research literature. In addition to working with traders, I teach at a medical school at SUNY Upstate Medical University in Syracuse, New York. And I teach coursework in brief therapy, short-term approaches to psychological change. And my colleagues and I reviewed the literature. And one of the things we found was that people are most likely to change in emotional circumstances. In other words, let's say I have a drinking problem. Well, if I'm comfortable with my drinking problem, and sometimes I get drunk and sometimes some things happen, but I'm in my usual state of mind when I talk to you, my therapist, I'm much less likely to make any changes or sustain any changes than if I come to you really upset about what's happened and how my drinking has really ruined my life in so many different ways. And I feel like I've hit bottom and I'm just upset. In that state of emotional arousal, I'm much more likely to process new and different information and to sustain efforts at change. So, for people in the trading world, just carrying out reviews, here's how I made money, and here's what I did wrong, and we're just in our usual states of mind, that doesn't really have any emotional force. It's really getting excited about what we do well and disgusted about what we don't do well that helps us initiate and sustain changes.
Yeah, so that's why it's so important to have a major drawdown or a blow up or something in your trading experience, perhaps, right? So that you can see those events and get really motivated to change. It makes me think that when we're in the darker moments, we sort of naturally just want to feel sorry for ourselves and not really see the positives in it. But that's, I guess, the time to remember that this is an opportunity to make these changes and to build something out of it, to learn something from it.
Yes, those dark moments can catalyze efforts at change. On the other hand, there's an approach to psychological change that I've written about called solution-focused work. And so in solution-focused work, you look at what you have done well. Rather than analyze your problems, you focus on your successes. What did I do really well? And let's reverse engineer that. Let's figure out how I did that, and let's do more of what works. Let's build on our successes. So let's say I'm a member of a quantitative team, and our team gets together, and we're trying to figure out something about the US dollar and how it's trading. And we go back to, all right, well, wait a minute. When we were focused on rates markets, we came up with some really good ideas and tested those really well. How did we do that? What did we do well? Let's get excited about our best practices and let's see if we can apply it to this new area of the US dollar. So that's a way of taking emotional arousal in a positive context and building on successes. I have a book coming out called The Positive Psychology of Trading, and some of these techniques are outlined in that book.
Really cool. So when's that due out?
Early in 26.
Okay. Yeah, that makes me think as well of the. I think this harks back to one of the 7 habits of highly effective people, sharpening the saw. And again, I'm terrible at this. Just we're so busy, we're so focused. It's very hard to take time out to do these exercises that you're talking about. To take time out to go, okay, well, let's do an exercise on reviewing how we did that, what we did well there. So I guess there's a certain amount of discipline involved. We've got to read the books, know some of these principles, and then make sure that we implement them in our lives.
Yes, and there are team-based principles and practices, some of which are designed to increase creativity, where there's a period of brainstorming within the team where people have done their research and let's say we have 5 people on our team and we've each done our own research, and each of the 5 people on the team puts on a whiteboard the top 3 ideas they came up with in that research. So now we have each person top 3 ideas. And so we have 15 total ideas. And then we get into a brainstorming process. What if all 15 of these are true? What would that mean for this market? What would that mean for trading? So let's put these ideas together in some unique ways. And so by blending perspectives from different people, we come up with new conclusions. We come up with fresh insights.
Yeah, really valuable to have people to collaborate with, and the average retail trader lives a kind of a lonely life. So I really do think what you're saying, it's a motivator for us to get involved in communities, or to find 1 or 2 people to really collaborate with on our trading. And I've done that myself, and it's been incredibly valuable.
It's very valuable. I work with teams in the medical world, and surgical teams, research teams. No one's working in isolation. We all learn from each other. There's a saying in medical school: each one, teach one. And the idea is we learn from each other. And so I think it's vitally important to be in that team context and keep coming up with fresh perceptions, fresh ideas. That's what keeps the creativity going. That's what keeps the motivation going. That's what prevents us from becoming stale.
I guess in the trading world, a lot of the desire to go it alone comes from the idea that we've got to guard our IP, and that I can't share it with somebody else. And if I share what I'm doing, they're going to take my strategy and ruin it for me, or whatever. So, have you had any experience with that? I mean, is it to my mind, I would say we're better off sharing, developing those teams, rather than having that mentality of I've got to sort of guard my IP.
Yeah, it is important to guard intellectual property. And that's something that's emphasized at the hedge funds where I work. And I think that's why there's the quant teams are fairly large, because within their team, they can share their intellectual property and they can do that brainstorming. Whereas if they tried doing that outside their team, and it's certainly outside their firm, then they could be giving away some of their edge. So I think the intellectual property is worth guarding. But if you could form a team that is dedicated to preserving the intellectual property and building upon it, then I believe you could have the best of all worlds. There are also ways of sharing ideas without necessarily getting into the nitty gritty of the IP. So, for example, one of the things I look at in my research is a very frequently updated number from the New York Stock Exchange. So this is for equities. And it's updated every few seconds. How many stocks across the NYSE universe are trading on upticks versus downticks? So that's coming out just continuously. Well, it turns out that there are patterns in those data. And that high frequency data shows not only how the market's behaving, but actually shows who is in the market. Because if we get large peaks and valleys, if lots of stocks are trading on upticks or downticks at one moment in time, that's not retail traders. Those are big institutions moving baskets of stocks. So you can figure out who's in the market. Now, I can share that with you. I can share that with others without sharing the specific algorithms for identifying or the specific values or levels that tell you when institutions are getting more involved, less involved, more involved on the buy side, sell side, et cetera, et cetera, et cetera. So there are ways of sharing ideas without giving away IP, I believe.
Just while I think of it, Brett, what about your own trading? So you still do trade yourself, is that correct?
Yes, but on a part-time basis because my main work is working with traders and teams.
So you take longer-term positions?
Actually, just the opposite. I trade very short-term. Yeah, very much intraday, very short-term, so I can get in and out and free myself up.
Right.
You don't have to be thinking about market positions while I'm talking with hedge fund teams.
Yeah, that's awesome. And so is this mainly stocks or futures?
Yeah, so it would be stock index futures.
Yeah, okay. So short-term stock index futures within a day, close out at the end of the day, and free your mind up for whatever comes next. And you just pick and choose days. You're not necessarily doing it every day.
Not necessarily every day, and I would almost never. Well, there's some research I've done on identifying trend days in equity markets. Those have certain features early in the day. That might be a situation where I would buy or sell early in the day and just hold, but that's the exception. What I'm trying to do often is catch swings during the day. And some of that is catching those cyclical structures that we were talking about earlier from John Eller's research. And so if I see that the market is in a cycling mode and we're at the peak of what could be another cycle, and I see buying activity drying up, I might go short to cover toward the bottom of that cycle.
So, I'm curious now that what a psychologist does when he comes to trading. So do you have any sort of systematic rules-based elements there? How would you sort of put yourself on the spectrum between rules and discretion? And being a psychologist, is there an emphasis on behavioral economics? So you're thinking about the behavior of the market. What's your personal approach there?
Yeah, it's a good question. A little bit of all the above, but you're making a good distinction. The distinction between rules and actual algorithms. So I'm not just trading chart patterns subjectively, and I'm not trading systematically, algorithmically, but I have rules that guide defining opportunity and how to get involved in that opportunity. So the trading is as rule-based as possible.
Mm.
And the idea is often, if I had to identify a single factor driving my trades, it's figuring out who's trapped.
Mm.
When are people buying, and the market can't go higher? When are they selling, the market can't go lower? Figuring out who's trapped, because in the current world, no one is allowed to lose money in the institutional world. Risk is managed much more tightly than when I first started out in the business. So you can figure out who's trapped and take a position to benefit from that.
So would you call yourself a tape reader? Do you find that you're reading the tape quite a bit, or do you use like volume profile or any other of those kinds of tools?
Yeah. So I am reading short-term market behavior. This, by the way, is my friend. This is a cat from Thailand.
Right.
So she does all of my EM work, and she's very good at emerging markets. But anyway,
Yeah, right.
this is a relatively rare cat called a cow mani,
Yeah, right.
and
Cow money.
yeah, cow mani.
Beautiful
So
looking cat.
anyway, she keeps me company, and she is quite vain and likes to go on cameras. So
Yeah, right.
anyway,
Well, she's
yeah,
famous now.
exactly. So yes, I'm looking short term, and I'm looking at differentiating the activity of buyers and sellers. How much volume is being transacted at the bid price? How much volume is transacted at the offer price? How is that shifting over time? What does that tell us about the relative activity of buyers, sellers? What does it tell us about the relative activity of institutional buyers and sellers? So I'm trying to make inferences about all of that to figure out where we might be turning, where we might be breaking out of ranges, et cetera, et cetera.
Yeah, well, that's obviously so that shows your passion for trading there. You haven't been tempted to try anything that's 100% sort of systematic that you could automate completely and backtest thoroughly and then let it go and not have to sort of sit down at the screen to trade at all?
I If I have any strength as a trader, it's that reading of the real time activity. I think that's the same skill I have as a therapist. I'm good at listening. I'm good at hearing the changes of tone in people's voice. When they change topics, that has meaning. I can figure out what's going on in their head and I can address that. And so I wouldn't use a quote unquote purely systematic approach to helping people in therapy. That sort of misses the intimacy with what's happening, that, at least for me, I believe is my strength.
So you really got to play to your strengths. And a lot of people that come into systematic trading, they've often got that like engineering background, or they're
Yes.
a coder or a developer. And that can provide that initial interest. But, because they're problem solvers, let's say. So they want to solve the problem and then, package it up and go, okay, I've done that. Have you seen with the systematic or the quant teams that you've worked with whether some of those traits are like where they fit on the spectrum? Because sometimes, from my experience, I've seen you can be, a real problem solver, but then lack the kind of, if you like, entrepreneurial flair to work out how to make that work in the real world.
Yeah.
To actually extract money from the markets.
Yes. And again, I think that's why it's helpful to work in a team context. I think about quant teams I've worked with, and there are some people with that engineering mindset and background who are just great at collecting data and organizing it and finding patterns within it. That's different than the entrepreneurial activity of building the team, of expanding the range of options for the team's investments, et cetera, et cetera. And so when you have a diverse team, different talents, different skills, you can address the different parts of the business much more easily. Some of the best quant teams I've worked with are really collections of specialists.
So if you were a single trader, you would ideally have, like, is there an optimal set of characteristics that the one person would have to embody the whole team? What are those key characteristics that need to all come together? If you need to be a sort of a data person, but you need to have the right personality type, and you need to have the right entrepreneurial outlook. Are there a set of characteristics that are defined by that whole team that make it a success?
I think the success of an individual trader is going to be different from a team's success.
Mm-hmm.
Let's say that I'm an individual doctor and I want to practice solo. I'm not going to do surgery, right?
Yeah.
That can only be done in a team. You need an anesthesiologist, you need surgical nursing staff, et cetera, et cetera, et cetera. But I could, in a solo mode, do primary care practice, let's say. I think it's similar for traders, that you can define an area that speaks to you, that you're good at, and where you can fill the functions needed. I think some day traders do that. And you're not trying to fill all the functions that a large team would tackle.
As we start to close out, Brett, thinking about the retail trader, and I appreciate you work with the firms and the institutions, but how can the individual trader give themselves the best chances for success? And one of the things that I'm thinking of is to stay with it long enough to even have that chance. And I'm thinking of trading being a performance / sporting activity. What are some of the things that the newer trader needs to be mindful of to give themselves the best chance of making it in whatever time frame that might take?
Yeah, I'm a firm believer in mentoring. If you look at the development of athletes, the development of people in performing arts, they grow through coaching and mentoring. And I believe that's true in the trading world as well. So finding people to learn with, finding people to learn from, very, very important. There is a short-term trading firm that I've worked with for years, SMB. You might be familiar with them.
Indeed.
And a big part of what they do is that kind of mentoring. They're organized in teams, and there are senior members who lead the team, and the junior members get to see what the senior members are doing and emulate that and learn from that. I think that's a very helpful context. If a trader is completely on their own, then they need the time to explore different markets, different strategies, different ways of taking advantage of markets and making sense of markets, and keep their capital safe while they're exploring all of this. And over time, they will discover what they're good at. Over time, they'll discover what really interests them, which, back to our earlier conversation, that's really about their talents. They discover what they're really good at, and they can focus their efforts in that way and build upon success. That's that solution-focused approach. So by studying what they do well, studying what's meaningful to them, what they have a passion for, they can further their own development.
when you're working with these teams like in SMB and you're seeing this coaching take place, is one of the things that they have to talk to the new recruit about expectations? Like, are the newer traders' expectations too high, for example?
Yes, and everyone's excited, right, when they first come on board
Yeah.
and they want to make money. But many times the traders begin in simulation mode. They're trading live market data in a simulated account. And so it's taking P&L completely off the table so that they can learn from experience, make mistakes, learn from that. And then when they show promise in simulation mode, they begin trading a small amount of capital and work on that and eventually grow their way. But the idea is to make the learning curve sustainable. Now, on quant teams, because it is team-based, there's learning from the research processes of the team and what the team has been good at. And so you're really getting the mentoring by shadowing. This goes on in the medical world also. You're shadowing the various people on the team, learning what they do, how they do it. You internalize that, and that helps you make your contributions.
All right, Brett. Well, we've been talking for about an hour, so I will let you go. But I really appreciate that. I definitely have a few things to meditate on myself or to contemplate.
Oh, good.
And I really like the creativity aspect and focusing on generating creativity, becoming more creative in our very right brain, numbers-based world.
Right. So there are applications of psychology that are different for different kinds of traders and different kinds of trading. But I think being creative and growing our creativity can make systematic traders as broad as possible and therefore as successful as possible. Thank you for having me. I appreciate the opportunity to share the ideas.
Thanks very much for coming, Brett.
We should remind you that the conversations on this show are informal and for entertainment purposes only. Certainly any general advice you may hear is obviously not specific to your needs, goals, or objectives, so nothing discussed on the show should be considered as investment advice. If you want that, you'll need to actually do your own research and speak with your financial advisor. Remember, trading can be extremely risky and past performance is not necessarily indicative of future returns. If you enjoyed the show, please subscribe or leave us a review, and if you have any questions or feedback, we'd love to hear from you. Bye for now.